Ladies and gentlemen, we are back in another video. It is the end of March 2026, and what a month. My goodness, we set all kinds of records this month. So, mainly, we're multimillionaires officially March 2026. So, it took exactly 14 years from graduating high school to hit the $2 million mark this month. So, a lot of things to update everybody on. I'm going to try to touch base on as many things as I can. As always, ask questions down below. Happy to answer any questions that you have. And really, the goal here with the channel is just to get you all familiar with my circumstance and help you all achieve financial freedom if that's what you are shooting for. So, first, let's dive into income for March. Again, we set all kinds of records. So, for March, I got a massive bonus at my pharmaceutical job. So that bonus was $62,000 gross pay. I got a 3.5% pay increase this year, which is way higher than I thought I would get. Usually I get about 2.5. So my base salary now is about 190, somewhere in the ballpark of 190. And then it seems like I'm getting bonuses somewhere between 45,000 and 60,000 most year. And then next year I'll have stock options with this as well. So I'll probably be in the ballpark of 250 to 300 gross pay. And again, if you're new to the channel, I am working in pharmaceuticals. I've started in pharmaceuticals at the age of 18. And so I am currently 31. So it's been 13, almost 14 years now that I've been working in pharma, all the way through college. And now done with a master's degree. We're just chugging along each and every day. So gross pay 26,000 or 76,000. Taxes, of course, they take a huge chunk of taxes, $25,000. Speaking of taxes, I'm going to jump ahead a little bit. We finished our tax return for 2025. I thought I'd get back 30 or $40,000. It was not the case. I only got back 19,000, maybe 20, just below 20,000. So to get into the weeds there a bit, I have some about $60,000 in unallowable losses, unallowable passive losses from 2024 and 2023 that I cannot get rid of. So basically, I have to wait until I have more passive income, like from stocks or something like that, and then I can start to use some of those unallowable losses. So that's where I made the mistake when I was calculating my tax return a few months ago. So it was not 40,000, it was about 20,000. 401k, $838, just doing 6%. We're working on paying off our house. Once our house is paid off, I'll move this up to the maximum that I can contribute to my 401k, maxing that out every year. We are maxing out the HSA every year, so that's 477 for month of March. Our insurance for a family of four costs $464 per month for all four of us. And then take home pay this month was just under 50,000. So again, these numbers may seem absolutely crazy. They are honestly to me a little bit. This is 1 month. This is a month where I get a bonus. Usually the numbers are somewhere around 10 to 15,000 a month. So this will not be the case for the rest of the year. I knew that March was going to be a crazy month. So for my wife, same typical pay that she normally receives, 727 gross pay, 619 take home pay. All of the tenants paid on time and everything, so that's 1350 plus 1525 is 2875 we made in rent. And another huge category here for other. So $58,000 of other. So if we look up here, 19,987 was our tax return. I had, if you didn't know, I'm also working in real estate. So I work full time during the day in pharma, and then we have rental properties, and I'm doing real estate agent stuff on the side, air quote part time, but it's turning out to be full time. So four closings this month, which is insane. That's more than I had about all last year. So the first one was for $3,700 take home pay. The second one was for about $8,000 take home pay. The third one was for almost 19,000 take home pay, and the fourth one was 8,075 take home pay. So I really cleared the board with a lot of the listings I had. I was helping a few buyers as well. I do have maybe one, two, three, four, five other properties in the works, buying and selling. So there might be another 30,000 to be made as it stands right now for the rest of 2026. So gross pay for the month 138,000. Take home pay was 111,000. You can see all of my lifetime totals down here at the bottom. Feel free to pause the video if you're interested in that. So jumping forward to the net worth statement, you can see down here we are officially past the $2 million mark. We flew past it. We had the best month that we've ever had. And just for context, before I even dive into this, It took what 4 years, I believe, from 18 to 22 to build the first $100,000. And that was, me making 11.95 an hour, working 80, 90, 100-hour work weeks in pharma while I was going to school full time. Even doing all of that, and that was 13 years ago when, things were a bit easier. It still took 3 to 4 years just to get 100,000 saved up. And then now you fast forward 13 years later and we went from 1.969 million to 2.069 million. So that's 100,675 increase in net worth in 30 days. So it just goes to show. I thought of a quote the other day of, I really suffered or sacrificed or went without things from probably 18 to 22, and really I think there's a correlation there of how much that effort that you put in and savings and focus on towards a goal, and then it has like an exponential effect later on in life. And so I'm roughly 10 years after that where I made that huge sacrifice at 18, 19, 20, 21 years old. Um, working full time, going to school full time, getting into real estate, finding good deals, flipping houses while doing all of that stuff at the same time. And then now things are significantly easier. So, I would say I'm operating about 60 to 70% of the capacity that I was at 18 or 19. Back then, if I had to sleep on the manufacturing floor, I was sleeping on the floor and doing whatever it took. But fast forward 13 years, and now we have months like this where I can work 60% of the effort that I did back then and still achieve 3 years worth of results in 3 days or 30 days. So it's just, again, it's humbling to see I'm still the same person that I was 13 years ago, but um, it it's just nice to see that the effort from that long ago has paid off. But okay, so let's jump into our net worth a little bit. Really, nothing has changed with the properties. Real estate is in my area kind of just going sideways. As of today, March 31st, interest rates have ticked back up. About a month ago, they had trickled down. Trump had put in what $200 billion into mortgage-backed securities, so we had a temporary pullback in mortgage rates down. I had a few clients get under 6%. One got a 5.75% on a 30-year. Today we're about 6.5, so things have started to slow back down again until mortgage rates come back down. But again, I'm not really one to watch the news. I really watch what the Fed is doing in terms of monetary policy. So right now, it's a mixed bag. With mortgage rates around 6.5, investors are wanting higher premiums on bond yields and everything, and so even dropping rates has not had much impact on mortgages. My current play is to become debt free. I mean, at least as of today, and that can be subject to change if interest rates go down. I have about 1.2 million in equity sitting in real estate right now, with about 700,000 sitting in stocks. So if in the future I need to access some of that, we can do cash out refinances, hopefully at like 3% to do that. But so real estate is pulling back some in my area, not significantly though. It's kind of just trending sideways as it is in other areas too. Um, it looked like in various or areas of the United States, some areas are going up, some areas are going down as usual. But my area is just kind of going sideways for now, which I do think all of these valuations up here for the houses and land is accurate. The only thing to change here, I added $500 to miscellaneous. I had gotten a free trailer, and I spent maybe $400 or $500 fixing that trailer up at the very beginning of March. So I painted everything, I put new tires on it, new deck boards, everything. So it's a 7x16 flatbed trailer with a tandem axle. So it's probably worth 2,500. I have it in here at 1,500, just again to be conservative. But moving on to investments, market as I record today, it's a wild ride. Honestly, every day either we're either down 1%, everything's gonna crash. All of us are gonna be homeless. Then the next day, Trump will tweet something, and the market goes up 2.5%, and then nothing changes a week later, and everything goes back down. It is it is extreme volatility right now. The VIX is sitting somewhere around 30, which is very very high, which again goes into the play that I had in my primary position is as a stock that trades off of volatility. So that one for me is up about 10% for year to date. So that one is doing very well. We are very heavy in cash or money markets right now, just waiting for something to happen. The risk that I see with at these levels right now, it's like 6,300 for the S&P. Things are coming down a little bit. If it continues to drop below, 6,100, I may begin to start to trickle some things back into the S&P 500. But as of today, I'm finding things that are a little bit better than that. A good example is Archer Daniel Midland. I had purchased that in April of 2025, and that honestly to me is getting to a point where I may sell that. We're up 76% in 1 year on Archer Daniel Midland. So I just see what is available to me at this point in time. If I can't find anything, I'll hold money markets. If I find something, I'll make a play into that specific stock. So, and if I can't, if the general market is doing well, I may go into growth stocks or S&P 500. But current 401k, we have trickled down a little bit. So really this was the high in January. I had pulled 35,000 out of our Roth IRA, and so 744. I'm down about 3%. The stock market is down about 9% as of recording this video. So I've got some positions that are up and then a couple positions that are down. I would say of this 723, about 180,000 is invested into the general market, and then about 200,000 is invested into that one stock that trades off of volatility. And then maybe 100,000 is in things like Archer Daniel Midland and value investment plays that I see out there. The rest is all in money markets. So probably 400, 500,000 in money markets, give or take. So that's what the portfolio looks like currently for just stocks. And then again, once I pay off house number 8, the house my wife and I live in, I will up my 401k contributions to the max and start piling a little bit more into stocks. But moving forward to debts, huge progress for debts this month. So we made minimum payments on these top three. These are all fixed rates at very low interest rates, so I'm not super concerned about those, honestly. But we did almost pay off $100,000 on our primary residence this month, and as I said, we brought home about a little over 100,000, and so almost all of that went to pay off our house. So it's extremely boring, but I mean, guys, this is the reality of it. Finances inherently, if you're doing, in my opinion, as a W-2 employee for the past 13 years, if you're doing it the right way, it's pretty boring. We brought in 100,000. All 100,000 goes to pay off our house, and that's really it. Like it, we didn't buy a boat, we didn't go on vacation, we didn't do anything other than pay off our house. So I just think of the numbers as arbitrary. Whether it was $100 or $100,000 that came in this month of extra money, that's going straight to the house until our house is paid off. And again, our house is at 5.25% interest rate, so that's higher than what I can get in money markets, and it's zero risk to pay off from my mortgage, and that's $2,800 a month payment that I will not have once this is paid off. So even today, here's the master plan, everybody. So it's March 2026. I am pretty sure I can get this done before the end of 2026. So it will take us about 3.5 years to pay off $750,000 worth of debt. And here's how. So I have about 50,000 sitting in a 457B that I can put towards this, which would bring it down to 92,000. I'd have to pay some taxes on that, but I'll worry about that in March of 2027. Next, I have about 40,000 that I could pull in cash, 20,000 from each of these, and put this towards it here too. So that would bring it down to about 52,000. So 142 down to 92 down to 52,000. Now, hear me out. For the remainder of the year, if I just make my monthly payment every single month, that's about $2,400 a month of my 2,800 that's now going to principal because we're so far ahead in our payments. So that's about 20,000 that will be paid off just by making the minimum payments that I have each month. So that brings it down to about 30,000. Now, I mentioned earlier, I have 5 other real estate clients that are in the works as well right now, which equates to about 30 to 40,000. I'm assuming I don't get any new clients for the rest of the year, and assuming that those properties sell. But that would completely knock it out right there. But we're also saving. I would say on average we save probably 3,000 a month, and then we have a couple months like May and November where I get paid 3 times, which per paycheck is about $4,600, which immediately just goes to the house. So, guys, I mean, I think it's going to be September to October, and we'll have this done. We'll have drained our cash a little bit, but we'll drain it down to about 20,000 and about 5,000 in the rental checkings account. But that will be replenished over the next 6 months or so too. So, I mean, I think we're about 6 months away as it stands right now. And then really the game plan after that is we'll replenish our cash savings that we have right now. Probably get that back to 40,000. But then I'll just begin stockpiling money, and get that to probably 150 to 160. And then I'll make a determination at that point. Are there any good rental properties to purchase that are a 15% cash on cash return, that I want to fool with, that is in my area? If not, we'll just have a one-time payment to the land and pay the land off. And then so we will have zero personal debt, and then we'll just have these two loans associated with these two rental properties that are, 33% debt to equity ratio on those. So which are not a huge concern. And then same thing, I'll pile up money again and potentially pay these off at the end of that. So that's kind of what the next 1 to 2 years are looking like. And again, subject to change. Anything can happen. We're in war with Iran. There's potential draft talks. There's all kind of theories out there of things that can happen. So regardless, and this is just a message for everybody, the goal that I have is to have a plan no matter what happens, right? If you look at this setup that we have currently, is, let's say the money that we use today, the US dollar, completely goes kaput and we have to adopt to Bitcoin or to gold or, to whatever the new system is, Chinese yen, I don't know. We're still holding assets. We're still holding $1.2 million of property assets that are hopefully protected by that, and they would just those funds would be converted to whatever new thing that we're doing. So that's the message: is have a plan. Don't set yourself up to be solely reliant on the government to help fix everything, and the government to enact a policy that would forgive your student loans, or the government to change 401k contribution rates, or the government to force your employer to give you a higher annual raise. Try to set up a plan that no matter what happens in the government or the system that we all reside in here in the United States, you win no matter what. And so that's how I feel. Currently we have a system that no matter what happens, we're probably going to be okay, with the things that we built, with the variability, with the different asset buckets. No matter what happens, we're probably fine. And in general, we're saving significantly. Even making 300, $400,000 a year, we're still saving about 50 to 60% of that. We're not getting crazy with our finances. We're even I feel like if other people were in the same scenario with over $2 million, they'd probably be going on vacations, buying new vehicles, things like that that are maybe not the smartest decision. And so my family and I, we are taking the very safe and conservative approach to eliminate all risk, which risk in this scenario would be debt. And then once that is eliminated, then we increase income with our rental property investments, and we go from there. And so no matter in that scenario, I'm setting myself and my family up for success. So that being said, get off my high horse for a second. We replenished about $8,000 in cash, so some of that we had to deplete a little bit from last month. So we went back to 40,000, which is our standard for like a 6 months emergency fund. The rentals checkings account is doing very well. I actually had to spend some stuff on a couple small repairs this month, but we're still saving about $1,000 a month. And we should be getting our tax assessments, and that's something else I need to talk about too. We should be getting our tax assessments here pretty soon, and I had appealed the taxes last year and went to court for that, and I won that court case. So they should be lowering the taxes for 2026 on these two rental properties, which again will help my cash flow perspective on these two rentals. The only other thing I wanted to mention there too was if you go back to like March or April of 2025, um, the county that I lived in had messed up our personal property taxes, for the primary residence that we lived in. We paid $10,000 instead of $5,000 last year because of a mistake that they made at the county level. That mistake actually occurred in 2023, and it's been 3 years of me fighting, with the auditor's office, the assessor's office, with the courthouse where I live, and to try to get that resolved. And I had to appeal to the state in which I live and take it to court at the state level. to even get it solved. So I presented that last week. And of course, this is how government works. We'll get back to you in 180 days on that determination. So if they agree that I have a good case, which I feel like I do, it seems to me like it's common sense. Then they should be returning that $5,000 of extra property taxes I paid last year. So just an FYI, we got a lot going on between pharma, real estate, rental properties, going to court, all that stuff. It's we're moving. So total cash is 65,000. Net worth is over 2 million. So again, we had an increase of 100,675 this month, and we crossed the threshold of 2 million. So again, I think we're safe. I mean, unless we have a giant market crash, which even then I don't think that would bring us below 2 million. Maybe if we had a real estate crash along with that at the same time, potentially we might go back under 2 million. But I think, I mean, we're pretty safe going forward. So we'll see what the rest of 2026 ends up being. Hopefully, we can end the year at like 2.2 or 2.3. And again, for context, to go from 0 to 100,000 was 3 years. To go from 0 to 1 million was 8 years. Is that right? Yeah. No, 9 years. Almost 9 years to go to 1 million, and then to go from 1 million to 2 million was almost exactly 3 years. So to go from 2 to 3, I'm assuming it's going to be 2, maybe 2.5 years from now. Which honestly, with pensions and stock options that I should be getting, I think that's probably accurate. Probably 2028 we'll hit the $3 million mark and just keep chugging along from there. But as always, feel free. I probably won't do the budget this month. If you guys are interested in that, put a comment down below, and I'll make a short or a smaller video just going over our budget for March and how we did and what April is going to look like going forward. But please make sure you comment down below, ask any questions that you have, like, share the video. I do respond to every single comment that is down below, and appreciate you guys putting the comments down below. I find them very interesting on what scenario that you're currently in, what questions that you have, what things that you find are interesting. Yeah, so if no questions, we will see you all in April.